Investment strategy: upgrade equities to overweight. Move developed markets investment grade DMIG to underweight. In line with our base case scenario, Joe Biden is declared as the president-elect of the U.S. With the Georgia runoffs to come, a Senate majority remains possible for the Democrats, although it is more likely that the Republicans will remain in control. We see many positives under a Biden win and a split Congress. Trump's tax cuts are unlikely to be reversed under a split Congress scenario. Biden's team is also more strongly positioned to manage the COVID-19 crisis. Only hours after being declared president-elect, he has announced a team led by credible scientists to combat the pandemic. Another focus is to implement a new relief stimulus package, and we believe that there is sufficient common ground between both parties to enact a relief aid package that is around $500 billion to $1 trillion in Q1 2021, which will be critical in supporting the nascent post-pandemic recovery. Bottom line, we see the outcome of the US election to be favorable for markets over the long term. Turning the page on the US elections will result in reduced uncertainty for investors and policymakers. This is positive for market sentiment and also provides the US Federal Reserve with the necessary clarity to craft monetary policy to support the recovery. Looking ahead, we expect an overall environment characterized by a gradual economic recovery, mildly higher inflation, persistently low policy rates, and a weaker US dollar. This is broadly supportive of equities, credit, commodities, and emerging markets, in particular the Chinese currency and risk assets in Asia, and will result in a moderate steepening of the yield curve. Investor cash holdings remain high, which is fuel for the long-term post-pandemic bull market. The equity positioning of investors globally is below its long-term average, which is a supportive factor for equities. We shift our view on overall equities from neutral to overweight, in consideration of our updated overweight view on Asia, excluding Japan equities. To position for a steeper yield curve, we're updating our view on developed markets investment grade DMIG bonds to underweight from neutral.